Let's turn now to your bond update, because with oil prices falling for an 8th straight day, the longest losing streak in about 2.5 years, it's causing some pain among the most indebted companies in the shale patch. Lisa Abramowicz has been tracking all of that for us. Lisa?
Scarlett, thanks so much. I wanted to take a look as we see oil prices falling at one point today to the lowest since January at about $52 a barrel. And this comes pretty much in tandem with declining expectations for the growth in the U.S. and globally. I wanted to take a look at the effect on high-yield energy bonds, because these have been pummeled back certainly in 2016 and yet again this year, severely underperforming the broader high-yield bond index, which if you take a look at, well, this is the yield on energy junk bonds, and you can see it's risen back toward the highs that we last saw back in 2016. These are some specific junk bonds that have been uniquely punished of late. Diamond Offshore Drilling at 74 cents, Rowan Companies at less than 70 cents, and Valaris bonds trading at less than 50 cents on the dollar, with some energy companies starting to file again for restructuring. And this comes even after the shakeout in the shale patch, which we saw back in the aftermath of the plunge that we saw in 2014 in crude values. So a lot of people are looking around and saying, how much more distress is there? Which companies really are not viable at the levels of oil prices that we're seeing currently? Because that does seem to be the case for a growing number of over-levered drilling companies.